Vietnam's January PMI held above 50, signaling steady manufacturing growth. Vietnam's manufacturing sector has started 2026 on positive note, as country purchasing manager index remained firmly in expansion territory. According to the latest data, Vietnam's PMI stood at 52.5 in January, indicating continued growth in industrial activity. While the figure edged slightly lower compared to December 2025, it stayed well above the 50-point threshold that separates expansion from contractions, highlighting the sector's resilience amid global headwinds at the beginning of the year. The January reading marked the 7th consecutive month of growth for Vietnam's manufacturing industry. This sustained performance suggests that the sector has successfully carried momentum from the end of 2025 into the new year, supported by rising output, stronger new orders, and improving labor market conditions. For investors, policymakers, and businesses alike, the data points to manufacturing base that remain broadly stable despite ongoing global economic uncertainty. One of the most notable features of the January PMI report was the strengthening of output growth. Even though the headline index dipped marginally, production expanded at a faster pace than in the previous month. Survey firms attribute this improvement primarily to rising new orders, reflecting healthier market demand for industrial goods. The accelerations in new order growth compared to December indicates the demand condition remains supported, helping manufacturers maintain higher production levels. Export demands also show signs of recovery. New export orders returned to growth in January, albeit at a modest pace. Vietnamese manufacturers report receiving fresh orders from several Asian markets, including India. This development helped underpin production growth at a time when the global trade remained exposed to risks from geopolitical tension, shifting trade policy, and uneven economic recovery across regions. Stronger demand conditions translate into continued job creations. Manufacturing employment increased for the 4th consecutive months, with the fastest pace of hiring recorded since June 2024. While the overall rise in employment remained moderate and some companies rely on temporary labor contracts, the trend reflects growing confidence among firms regarding future output and other prospects. Businesses appear increasingly willing to expand their workforce to meet sustained production requirements. The shading activity also rose further in response to higher production needs. January marked the 7th straight month of growth in input buying as firms sought to secure sufficient material to support rising output. However, these expansions came with some pressure on inventory. Input stock declined for the first time since September 2025, as material were used more quickly to keep pace with the productions. Meanwhile, inventory of finishing goods fell at the fastest rate in 4 months, suggesting solid sale performance and efficient stock management. Supply chain conditions show mixed signal. Supplier delivery times continue to lengthen, although the degree of delay was the weakest since in 8 months, pointing to some improvement in logistics efficiency. At the same time, backlogs of work declined slightly for the 2nd consecutive month, indicating that manufacturers are gradually improving their capacity to protect incoming orders and reduce accumulated workloads. Beyond operational performance, business sentiments within the manufacturing sector continue to strengthen. Optimism regarding output over the next 12 months rose for the 4th straight month, reaching its highest levels in March 2024. Around 55% of survey firms expect production to increase over the coming year, driven by expectations of further order growth and more favorable market conditions. This rising confidence reflects a belief that current demand trends can be sustained, at least in the nearest term. Commenting on the data, Nguyen Thuong Long, a senior lecturer at the Institute of International Trade and Economics under the National Economic University, highlighted that the PMI remaining above the neutral mark underscored the resilience of Vietnam's manufacturing capability and stability of its industrial supply chain. He noted that the production activities is being maintained at a stable level, with room for further market expansions, while the key input factors such as labor, capital, and raw material experience moderate growth. Nguyen Thuong Long added that even a 1 to 2 points increase the PMI would underscore a positive outlook for the upcoming period. Such an improvement would also reflect the adaptability and the competitiveness of Vietnamese product amid shifting market conditions and intensifying regional competition. However, the PMI report also points to significant challenge. Input costs continued to rise sharply in January, easing only slightly from highest level record in more than 3.5 years in December 2025. Higher demands for input, combined with shortage of certain raw materials, have driven up costs for manufacture. These pressures have, in turn, forced firms to raise selling price. Output price increased at the fastest pace since April 2025, highlighting persistent inflationary pressure within the manufacturing sector. Despite higher price, demand has so far shown no clear sign of weakening, suggesting that buyers are still willing to absorb cost increase, at least for now. Andrew Haga, Economics Director at S&P Global Market Intelligence, said Vietnam's manufacturing sector has made a solid start to 2026 as firms ramp up productions to meet rising new order. While the outlook for the year remains relatively positive, he cautioned that inflationary pressure and raw material supply shortage can become headwinds if they intensify, making it essential to closely monitor demand trends in the months ahead. Looking further ahead, experts warn against complacency. Vietnam's highly open economy remains exposed to external shocks such as geopolitical development, trade policy change, and intensifying global competition. To sustain stable growth throughout 2026, businesses are encouraged to diversify export market, proactively seek new order, strengthen internal capabilities, and develop effective risk management strategies. The measure will be crucial in ensuring that early manufacturing gains translate into long-term industrial resilience and sustainable economic growth.